Okay, hey everybody, Dan Fitzpatrick here, stockmarketmentor.com, and I want to talk about Tesla today. Now, my wife and I own a Tesla Model X, and we love it. It's the one with those Falcon wing doors, which are kind of cool unless you're trying to open them in the garage, and then the garage door kind of does not allow them to open all the way up, but that's a minor point. My wife digs it. It's also a commuter car, meaning we're not going to drive it cross country because of the charging issue. And that's a now issue. That's a right now issue. And if anybody, oh yeah, but they're doing this and that, screw you, dude. I'm talking about driving right now, not what's going to happen in 5 years or 10 years. What I'm saying is, in my typical irreverent and offensive way, what I'm saying is, as far as consumers go, consumers buy what they can use now. They don't plan ahead for a rainy day unless they're buying an umbrella on sale in August. So we like our Tesla, but we use it as a commuter car because that's what works for us. And we will not be buying the car when the lease is over, because you're not even allowed to per the terms of the lease agreement with Tesla. You have to give up the car. If you want to buy another one, that's fine, but you can't say, hey man, what's the residual value on this? I'd like to buy that. And I'm going on to make a point here. So we wouldn't want to do that anyway, because those batteries do have shelf lives. They have like use by dates, right? Now, as a commuter car, our battery is probably going to go for a long time. But I know this, when it does come time to replace the battery, it's going to take tens of thousands of dollars in order to replace that battery. You're essentially replacing the guts of the car. So in light of that, it's not really a practical car for most people to own, and certainly not the Model X. And the Model 3, I think, is a lot cheaper. I mean, it gets cheaper all the time, by the way. But Elon has even said we need to anticipate slower growth, lower prices, and all that. So he's been kind of talking down the fortunes of the company, even though Tesla cars, I think they're awesome. I think they're great. But he hasn't exactly been saying, hey, man, it's going to be awesome. You got to get a Tesla and all that. He's even been talking down his own company. But this is the point that I want to make on this. This is not a stock that you want to buy, not by any stretch of the imagination. As I understand it, I don't really follow her, but as I understand it, Cathie Woods, for her ARK, whatever it is, Noah's Ark, has been buying Tesla like all the way down. The best thing that I could say about her is the thing that Kramer described her as quite a while ago. It was a couple years ago. It was funny as hell. He goes, yeah, Cathie Woods, she trades like she just started. And this is a great example of this. Let me show you this on Market Surge, or what's Market Smith, but it's the new Market Surge. So this green line here with the hash marks, that's their earnings. Now, this is a weekly time frame. And if you look at where the price peaked, which was back here in late 2021, it started moving lower from there. At the same time, earnings continued up and up and up and didn't peak until there. So the stock had already fallen quite a bit while earnings were still moving higher, and then ultimately now they're moving lower. Here's why I'm showing you this. Because if all you're looking at are numbers, if all you're looking at are earnings and just assuming that, well, the stock's going to take care of itself, you're not going to do very well at turns. While earnings are good, the chart's good, everything's good, everybody's brilliant and all that, fine. But at turning points, as we've seen with Tesla, you will totally miss out on this process of a top. And tops are processes, they're not events. So what I'm doing here is I'm pointing out to you how a stock will anticipate a change in fortunes even before they become apparent. And so you have to look at a chart and use that as really your windshield, pardon the pun, since I'm talking about cars. Look through the windshield of the chart in order to see what's on the horizon in front of you. And if you had done that, you would be seeing, you would have seen a definite clearer picture of Tesla. And so as I look at this, that doesn't really surprise me. Not really very much at all. So stay away from Tesla. And I think a good shorting opportunity, I don't really short stocks much anymore because I don't really think there's that much money in it, frankly. It's hard to make money on the short side. They tend to be more volatile. And I don't need the aggravation. But if the stock runs back up to here, let's say 180 or so, and then you look for a little pullback, a little reversal like that, that's when you want to short the stock. This is making lower highs, lower lows. You don't want a part of this. Don't try to catch the bottom. You're not going to do it. And even if you do wind up buying like right at the bottom, don't you have better things to do with your money than to sit here and try to fart around with an electric car company? Because guess what? I do. All right, that's all I got. Don't forget, in a few weeks, I'm teaching my Mentor Trading Mastery course. You can get more information on that on the website. It's going to be awesome. I'm going to be continuing, as I've been doing for a while, to work all weekend on it to make sure I get the material just right. Definitely, you should check that out. I promise you, you'll become a better trader. No question about it.